A short while ago, I spoke exclusively with Arizona Republican Senator John McCain about his new amendment for a Glass-Steagall ironclad firewall that would stop taxpayer-backed commercial banks from trading risky assets or investment banks. Take a listen to what Mr. McCain is proposing. You're stirring the pot today. You want to restore the Glass-Steagall Act, which would separate commercial banks from investment banks. Can you tell us what you're thinking?
Well, Larry, I'm not sure we'd call it restoration of Glass-Steagall. I think what it is putting a firewall between commercial banks and investment banks. We've been on the hook for $700 billion, and it's been a disaster, as you well know. And so that we don't have another financial crisis. If investment banks want to do whatever they want to do, that's fine, but let's not back it with the taxpayer's dollar. Could I mention one thing to you, the most interesting, and I wrote it down. There are 7,000 commercial banks, but 5 of them hold over 50% of the nation's bank-owned assets, and these same 5 entities hold over 95% of the risk in the derivatives markets. So they're too big to fail, yet there's been 100 commercial banks, small banks, who are too small to save. There's something wrong with that.
Well, those are important statistics. I agree. Let me just ask you, just to clarify for viewers, with the McCain-Cantwell bill, I take it you're co-sponsoring with Senator Cantwell.
Cantwell-McCain. Yes.
Cantwell-McCain, yes, sir. What would that do? Would that, in effect, reinstate the Glass-Steagall separation?
Well, you know, since Glass-Steagall, there's a lot of other ways for banks to do business, but the fact is it would have that effect. It would just return commercial banking to the traditional, maybe dull, but rather dependable way of issuing credit cards, making loans, etc. And if you want to get in investment business and take risks, fine, go right ahead. Just like the hedge funds did in this last crisis, they got hurt, but the taxpayer didn't get hurt.
Now, this afternoon, I spoke to your former colleague and good friend, the former Senator Phil Gramm, who was one of the authors of the original bill, I guess whatever, Gramm-Bliley-Leach or some such thing, which effectively overturned Glass-Steagall. Now, what he said to me, I'll get your response to that. He said, look, the bill's law, risky assets must be traded in a separate affiliate of the bank holding company. There must be a clear firewall between commercial banking and the trading of those risky assets. And furthermore, there must be no taxpayer-funded deposit insurance covering the trading of risky assets, whether it's in an investment bank or not. In other words, he emphasized that the law stipulated a firewall. Your response to what Phil Gramm is saying?
There's no person in this world that I admire and appreciate more than Phil Gramm. It was a Chinese wall, as we know. And the fact is that taxpayers' dollars were at risk. Look, you know what Paul Volcker said, as you know. He said, the banks are there to serve the public, and that's what they should concentrate on. These other activities create conflicts of interest. They create risks, and if you try to control the risk with supervision, that just creates friction and difficulties and ultimately fails. And what's going through Congress is greater and greater supervision and intervention by the federal government, who I don't trust to have a heavy hand in America's financial systems. Why not tell the people who are engaged in the investment business, do whatever you want? It's just the taxpayers are not going to be on the hook.
Would you be satisfied if the new banking regulation laws moving through the House and the Senate really operated on that firewall to make sure that there were no taxpayer funds financing the trading of the so-called derivative CDO, CMO risky assets? Would you be satisfied with a strengthened firewall?
I would be satisfied with a total firewall. As you just quoted before, when we repealed Glass-Steagall, they said, well, don't worry, because there will be a strict division between the two. There wasn't. The taxpayers were on the hook. And unfortunately, now we have a situation where the ones that are too big to fail continue to get free money at the window, and the small banks, like the 5 in my state that failed, who are commercial banks who were directly involved in a loan business, have gone under. There's something badly wrong with that picture, Larry, and so I frankly, I want to see them as separate entities.
Well, I think that you're dead right about the too big to fail and the unfairness of all that. I couldn't agree with you more on that. One of the things that always puzzled me, Senator, why is Goldman Sachs, which is a brilliant trading firm of risky assets, how can they be a bank holding company? I don't know even what a firewall means to them. I mean, they barely have any deposits. They don't have an ATM machine. I don't think they hand out credit cards. It's a legacy from the financial meltdowns of last fall. What the heck is Goldman Sachs doing as a bank?
That bewilders me, too. Perhaps there was a reason at the height of the crisis to give them that status, but they certainly absolutely should not have that status now, nor should Morgan or others. And so that would be the first step. Say, look, you aren't in the banking business, you're in the risk business. And no one denies you that right. But don't get free money from the Fed and also have the taxpayers back you up. Look, if you and I go to Las Vegas together and we decide to gamble and we know that whatever losses we take are going to be guaranteed, I think you and I would be at a pretty high stakes table, a lot higher than the one we would if we were with our own money, right?
Undoubtedly so. Undoubtedly so. Last one, Senator, you mentioned free money. Today, the Federal Reserve issued its policy statement, and their ultra-easy, free money, zero interest rate is going to continue for an extended period of time. Let me ask you, are you going to vote to reconfirm Ben Bernanke as the Fed chairman for a second term?
I'm leaning against. I think let's bring back Paul Volcker. John Taylor out at Stanford is an outstanding economist, but I'm leaning against, but I'd like to see the hearings and all the parts of it that goes into the decision-making process.
All right, Senator John McCain, we appreciate your time very much.
Thanks, Larry.
All right, there you have it. You know, I think